What's up, guys? Sorry, I just woke up. Welcome back. Correction is still happening, so check out the futures. What Becky was saying was that, believe it or not, the Dow was actually down on 365 or something at one point.
This morning.
But listen to what she says.
We're down triple digits, Dow down by 210 points. This is not the scariest numbers we've seen this morning. We've been down significantly more than this. At one point, I saw the Dow futures down by about 365 points. Right now, the S&P futures are down by 15. The NASDAQ is down by 48. And believe it or not, even with these declines, last week the market was down by 4.1%. Even with these declines for the Dow right now, down 209 below fair value, we are not looking at a 5% pullback over the losses that we saw last week and this morning if this were to continue. We'll talk more about that in just a moment, but in the meantime, this are earnings. 3 companies that have reported.
So apparently, you know, people are expecting a pullback, maybe 5 to even 10%. And she said we're not even at 5% yet, is I think what I heard. So, I'm a little nervous, I'm a little scared, but I'm going to try to stick with the game plan, which is incrementally buy as things come down. I might get a put just to try to jinx everything to come back up because I'm still nervous that it's going to keep going down, but I'm going to buy a little bit at a time. I might just buy like one call of a few different companies I like Nvidia. I might get one call with them, Facebook, you know, some of the ones I like as they come down, and then if they come down like tomorrow, maybe I'll buy a little bit more to try to lower that average price down. If this is a correction, and which I'm really hoping it is, stuff should come back up eventually, and I think they'll come back up pretty quick, and hopefully that'll just help us profit more, because yeah, I'm just a little nervous. But anyways, I guess we'll just see what happens.
Quarter beating estimates by 14 cents.
So this is good news. She's talking about 3 companies that beat on earnings that are up right now. So earnings are still strong, and even with this down, like this correction, there's some stocks that are doing well on earnings. And so this is making me feel better, because I think people need to realize that companies are having strong earnings, which means the PE ratio shouldn't be too high on average for everything. And so it should, hopefully people see this as a good buying opportunity. I think a lot of people are just panic selling right now. And yeah, so anyways,
up by 0.5%.
kind of wanted to show you guys that.
Metals producer Arcana.
Cash. The risk that every investor has is it's the one.
So I don't always agree with Mr. Wonderful, this guy who you've probably seen on Shark Tank. But I really do agree with him here about bonds. Listen to what he says.
The stocks do I buy? Your very meager 2-year yield? This is worthless. I mean, I would never buy
a real yield. You take it minus inflation. I'm still positive.
I would never put money to work in a 10-year bond yielding 3.1%, or a 30-year bond at 3.2, whatever it is right now. It's ridiculous. That is a very bad outcome. And I realize that some mandates require that, but it is not a place to make returns, which is my point. I'd rather own an American company that's having its taxes reduced by a massive amount this year, and watch what happens over the next 24 months.
The earnings are still going to be good. I don't think there's anything that's really changed that. And
so,
the market,
I agree with Mr. Wonderful. Like, I don't agree with him a lot, but this time I do. I still don't think there's much return in bonds. I mean, that's just for the people who are really, like, let's say you have, I don't know, let's say you have millions of dollars and you were just really scared of losing it. Then yeah, I could see if a 10-year bond is at 3%. Sure, why not? Because you put in $1 million, you make $30,000 in profit, plus you get your $1 million back. I mean, if you have millions and millions of dollars, $10 million would get you $300,000 profit, and that's like pretty much risk-free. But if someone wants like some growth, they really want to build their value, they want to build their wealth. Because I think just the bonds is just kind of like trying to stay above inflation, make a few pennies here and there. But if you want some really good growth, like what he was saying, Mr. Wonderful, he's like, I like the fact that a lot of these American companies are having their taxes reduced. Like, watch how that affects their profits. Like he says, I think the growth is still in equities and stocks. So that's what he says. I agree with him. I'm going to try to dollar cost average my stuff today. I'm going to buy a little bit more. If it goes down tomorrow, I'll buy a little bit more. And I don't think I'll have any money after that. So just going to have to cross my fingers and hopefully let the market recover, do its thing. Hopefully a month from now, I will appear like a smart person and someone who knows what they're doing, because this is my first time really kind of trying to do a lot of damage control. And so, yeah, I'm nervous, but at the same time, I think if I stick to my plan, I think we'll be okay. So, all right, the market's gonna open pretty soon, so let's see what happens. Hey guys, welcome back. So the market's open, it's 8:46. I was looking at this Nvidia call because I have 5 already, and I was looking to see if I could get in, kind of lower my cost average, but apparently I bought these calls in June. Let's see, where's Nvidia? I'm sorry. Oh, sorry, here. So this Nvidia January 18th, 2019 call, I bought June 9th of 2017. So I got in a long time ago at $10.80 a share. So if you see that 1,080, that's how much it was per contract. And it's still way above that, so I'm already up like 214% on that one. Nvidia must have been real cheap when I got that. So, and the good news is, because I got it so long ago, if I hold on to these 5 calls until June 10th, and I were to sell them June 10th of this year, that would put me into the long-term capital gains tax bracket. So I'd pay less taxes on this if I can hold this until June 9th, and I think I'm going to, just because Nvidia is at $223 a share and my strike price is $250, so I still got some time to wait before it to hit the strike. So I'm actually really excited about that, because I've been usually probably doing short-term capital gains on everything, so I haven't really been holding on to these options for that long. So yeah, that's something to think about. Maybe I might be doing like 2-year leaps from now on, or like a year and a half, so that I can hold on to them for a year with some good profits and not have to pay as much taxes. So that is something to think about. All right, so one thing I want to show you guys is this Nvidia call that I had set last Friday, or on Friday. It was for the 250 strike, basically the same one I have now, January 2019. I had set my limit price to $32, and I forgot to put it. I forgot to put good until cancel, but that actually worked out, because now that same call, I had the limit price at $32 and it's now at $29. So if I were to buy it now as opposed to on Friday, I would save an extra $300 roughly. I mean, if that was 30, let's just round that up to 30. I'd save about $200 getting it now as opposed to Friday. So again, that's why a lot of these professional traders or whatever, and you know, they recommend dollar cost averaging. So it's like you buy incrementally on the way down. And Jim Cramer mentioned like a pyramid type of thing, where you buy a little bit once it starts to go down, then if it goes down more, you buy a little bit more, and then if it goes down more, you buy a little bit more than that. That's a good strategy, because you know, as it starts to bottom out, that's when you want to be buying the bulk of your new positions, so you could really maximize your profits once it goes back up. So that's just a good example how the strategy works, because if assuming Nvidia comes back up, I'll be able to get in even cheaper now and lower my cost averaging and all that good stuff. So I just wanted to show you guys that. Sorry guys, one more thing. So I forgot about Alcoa. I mentioned them in my video about my top picks for 2018, and I forgot to buy calls on them, or anything for that matter. So they have a 5-star CFRA ranking. I don't know what that stands for, but that's really good. 5 stars is really solid. I think that's the most you can get. And I saw that their 52-week high was 57.50, and they're actually trading at 49. So they're about 13% off of their 52-week high. And so I picked up some calls with this one, hopefully at a good time, because if you check out January, they finished down for January, which means I got in cheaper than had I would have, you know, remembered earlier, and bought up here. So that actually was lucky. I'll take luck any day. And so I picked up 5 calls with them for a $55 strike, because since their high was 57, not even a month ago, I figured they can get back to 55 by next January. So, and because it's a cheaper stock, the options were cheaper. So I was able to get 5 calls for that much, $29.10. And I'm running out of money to spend, and if any of my other orders execute, that's going to go down even more once if any of these execute. So I'm still keeping an eye on it. The NASDAQ and Dow started to turn around again in the bad direction. So not too much, but this was, I think, down 26 like 10 minutes ago, and this was up like 35 10 minutes ago. So maybe if it comes down a little bit more, some of these will execute. Hopefully that'll work out, but if not, I gotta keep a close eye. If it looks like things are coming back up, I might cancel some of these, or I'm not sure what I'll do, but it's hard to predict the future, guys, so I'm trying. Alright, see you in a bit.
Brexit. So we're going to discuss the factors that could push us
There's a
lower
little recap of the bad days in
Let's
Dow.
look at returns.
A lot of them were after the housing crash. And that one after the .com bubble. Yep.
No one knows. There's no one
And
knows.
here they're talking about
The biggest question you have to ask yourself is, are we
this.
going to a recession or not?
No.
And we're not, right?
Yeah, I agree. I don't think we're going towards a recession.
Instead of flattening, which we're all
What I
assessing.
talked about yesterday with that chart definitely does not signify a recession's coming anytime soon. So this is the correction that people are asking for. That's what they were saying. This is the correction people were waiting for. So people who wanted to wait for this, they should be buying right now, and some of them are, and so, you know, it's natural kind of just the market doing its thing. What's up, guys? Welcome back. So it is 10:11 right now. Got the Scottrade open, hasn't refreshed yet, thankfully. So let's just see how we did. Obviously, we did horrible. All right, so we obviously lost more money today because today sucked. But we did a lot of trades, and to be honest, I'm not quite sure about these anymore. I'm going to talk to you guys about it after I show you. But we got into Caterpillar. That happened like right when the market opened. Yeah, because this is an Eastern time. So at 8:30, this was a call I had set, a buy order I had set on Friday, and I kept open. So it executed when the market opened, so I got in a little cheaper than I wanted, so that's good. Then I bought one more put on the SPY to hope, so I was trying to jinx the market to coming back, but ended up, you know, quite to the contrary. I actually made money on this, which is weird because I don't normally do that. It's just, I don't get it. Anyways, Netflix, I bought another call on Netflix, so I got in a little cheaper than the last time I bought in. So I'm trying to lower I'm trying to do like the dollar cost averaging. I'm trying to lower my prices. I think I talked about this already before, so I apologize. But yeah, you can see the trades I did here. I also bought Win because I saw on TV they were saying that they were down 17%. This was like in the morning. This was before the market went in free fall. But at the time, they were down 17% when the Dow was down 10. And they were saying when companies go down more than the market as on average, they could be good buying opportunities. So I was like, okay. I looked at their chart. You know, obviously the CEO is in a lot of trouble, but I think once they move past that, the stock will kind of rebound. I mean, if Equifax could lose 143, and I mentioned this before, if Equifax could lose 143 million social security numbers and rebound, then I think Win can rebound from this. So I bought one call, why not? Okay, sold my Verizon shares because my cash balance went red and I needed to have cash to cover this last trade that I wanted to do. So I kept this open, and when the market took another dump, it triggered. So I got in for Caterpillar, another $1 or $1.50 cheaper, I forget, but I saved money by getting in cheaper. Now I'm happy with that, but as you'll see, I'm still not happy. So let's look at the winners. Got lucky with the SPY, really lucky, because I bought the SPY, that last call, and I bought calls on Friday, but this last one, it was already more expensive than when I first bought it. I think I might be up 100% already on these puts on the other ones that I bought. I'll have to double check. Okay, so here we are. I bought in, well, I averaged, but I bought in at about $11, and it's up to $21.50, so I'm up almost 100% already since I bought it on Friday. So obviously in hindsight I should have bought way more, but I didn't because I was still bullish on the market. Okay, anyways, I'm still happy though. I mean, hey, I saved a lot of money so far with that. By getting that, it helped us make almost $4 grand today, although I got in this one kind of late, so maybe, I don't know, like $3 grand today, but still
The QQQ puts that I bought, I had all 5 of those before today, so I made 2 grand on that. And then the Amazon call for some reason went up. And yeah, that one will probably go back down tomorrow because Amazon stock went down. It might have been a spike in volatility or something like that. And then you can see a bunch of small gains there, a few zeros in the middle here, and then we go into a laundry list of red. Just ridiculous. But I mean, our worst gainer was still below 4 grand. So like as a whole, it wasn't that bad. And believe it or not, of the last 3 days, I lost the least amount of money today. So I'm hoping that's a good sign, but this is not a good sign. Look at the VIX up 115%, just redonkulous. Let's have a look at the chart to see what is going on here. If you look at if you look at the 5-day, it just went crazy today on Monday. If you look at the 3-month, you know, it was kind of low because volatility was kind of low in 2017, which is what kind of helped fuel such huge gains in 2017. Very, very low volatility, which means lots of confidence, lots of just predictable upward trends in the market. And yeah, I don't even know if it goes back 5 years. Yeah, I guess it did. 2015 had a big spike, and then 2016 there should have been a spike. Right around here was the election, a little spike there, and then 2017 was just a really good year, so you can see why here. And then right now it is just like almost catching up to where it was in 2015. I think this was Brexit. No, that was 2016. This was like right around Brexit. But anyways, I don't know what happened in 2015. I probably wasn't paying much attention at that time. But anyways, let's go back to the 5-day. Just nuts. Absolutely bonkers. So yeah, so let's just look at the rest of the watch list. A lot of weed stocks went up today, so that was pretty cool. Hemp went up, so hemp was one of the few ones that we did own that was up, and then a bunch of things that went down. So actually, Alcoa finished down. It was up when I saw it. And again, horrible numbers. Nasdaq went down 273 points. Not good, not good, not good, not good. All right, so this is really not hugely relevant at this point since you won't be seeing this for probably another month from now. But let's just talk about some of my concerns. All right, so here's what I'm worried about. I probably should have kept the screen recording going. Anyways, this headline on CNBC, it was Trump's biggest victory, tax cuts, could lead to the demise of his beloved bull market. And I don't know, maybe it was the image. Honestly, it could have just been the marketing. Maybe it's the clickbait image that kind of made me have like a flash forward, not a flashback, but a flash forward of me looking back at today and thinking, Trump, you know, he meant well, but I think the tax cuts, he got a little too greedy. This is me talking in the future, by the way. I'm imagining myself talking in the future, saying that he got too greedy. He thought, you know, lowering taxes would just help the economy, even though the economy was already doing well. And coupled with the wage increases, it just created a big inflation problem that the market couldn't recover from, and it kind of went into a bear market. That's what I'm kind of worried about, seeing this article. The Dow is down more. Oh my gosh, this article says Dow futures point to a more than 1,000 point fall at the open. This just came in. Tomorrow could be just as bad as today. This is gonna suck. But okay, so this article basically said President Donald Trump's tax cuts may lead to inflationary conditions and the end of the 9-year bull market for stocks. Billionaire hedge fund manager Dan Loeb specifically called out the risk of inflation to the market rally last month. So that guy obviously knew what he was talking about, and I'll put a link in the description for this article. I'm sorry it's going to get to you late, but I did do a live stream today, so I wanted to get to you guys right away. So I will put a link in the description to the live stream that kind of coincides with this video, and you can talk about you can see what I was talking about. But anyways, he was basically saying just the low inflation has been a critical support for the market because it allowed the Fed to be unhurried in its rate normalization. He wrote, we're watching closely to see how a tightening labor market and recently announced wage hikes will shape the future price of inflation or path of inflation. So again, when wages go up, everyone has more money. When Trump cuts tax cuts, companies have more money. And I think it's just kind of scaring people, these researchers here, because when everyone has more money, things will tend to go up in price because people can afford more. I think that's kind of the way I'm reasoning it. So for example, if everyone has more money, you know, a TV might cost $1,000 now, but if everyone has more money, the companies would be like, oh, people can afford more, so let's charge $2,000 for the same TV. and that's going to make your dollar worth less because now you need more dollars to buy the same thing, and that's what inflation is. It's when the value of the dollar goes down. And I'm really worried now that this is a real thing that could happen. The Fed is going to try to raise interest rates to kind of curb that, because if they don't, things can get out of control, I think. Please correct me if I'm wrong. Please comment in the comment section below. And people who are watching, please read the comments too. Just kind of skim through them. You know, the most liked comments usually come to the top, and there's usually good stuff in there. In case I'm wrong, and I put my disclaimer, I could be wrong from time to time. So I just want to put that out there again. But I do think that this wage increasing and the tax cuts could result in some more inflation. And now it's not a huge tax cut for people. People aren't going to be seeing that much of a tax cut because it's very small in relation to the companies. But the wage increases could kind of counteract, I guess, the lack of tax cuts. But anyways, I'm just worried about that. Some articles did make me feel better, like this one that said, Wall Street's biggest bull isn't fazed by the massive selling. And then Fidelity said it saw no panic among its customers and more people were buying than selling during the plunge. So more buying than selling during the plunge is what the article said. I'll put links in those description. I'll try to find those articles and put a link in the description so you guys can read those. Again, it might not be very relevant by the time you watch this. But anyways, this article had just came in at 10:26 p.m. Actually, no, it was published 6 hours ago. So it was like 4 p.m. So it could have changed since then, but it just said, oh no, wait, it was updated 2 minutes ago. Stocks futures slid into negative territory in Monday evening trade. The Dow futures were down 726 points, and the S&P 500 futures were lower by 66.5 points as of 11:15 p.m. Eastern time, which is 10:15 our time, and it's 10:26 right now. The implied open for the Dow based on futures was a decline of 1,103 points. Oh boy. Okay, so I'm going to tell you what my new game plan is, and I'm going to put the camera down because I can't hold this camera up any longer. Alright, so what I want to talk about is my strategy for going forward. I'm going to basically try to get rid of all my call options, I think, and I'm going to just get into stocks. So all the companies that I have options for, I might have to narrow it down to maybe not as many, but I want to get stocks and shares of stock in those companies that I'm investing in. Then what I want to do is sell covered calls against those just to make extra money while the stocks are going down anyways. And then I want to get some more puts on SPY and QQQ to hopefully make some more money on that. Again, I got to keep an eye on the open interest. I don't know, I got to do some looking at things to make sure I can even sell them if I do want to sell them. So, and I might just keep a pile of cash in, the cash balance and not do anything with it. I'm just not too confident right now about the changes that are being made, and I don't know. At first, I wanted to think it was just panic selling, which probably a lot of it is, but I do think that those investors have a good point about the inflation, and it just worries me. And I don't think if the inflation does happen and interest rates go up a lot, I don't think the market's going to be doing very well. I think we might be turning into a stagnant or bear market, which case owning call options would be horrible. So I think that's what I'm going to do. I wanted to show you one more thing before we go, so let me grab this. Yeah, so I was looking at this video. He was talking about moving averages. Let me kind of make the screen bigger. So he was talking about basically, so the moving average basically, let me explain what that is for those of you who don't know. A moving average is an average. So for example, the 50-day moving average, you take the average prices for the last 50 days of, let's say, all the companies in the Dow Industrial. So there's like 30 companies, whatever, that it averages. So you take the average of those prices for the last 50 days. Now every day that moves forward, the average shifts over a day. So then you take the next for the last 50 days from that new day. And that's why it's called a moving average. Now, if the moving average for the lower days is above the higher days, so the 200-day moving average should always be at the bottom if the market's going up. Now, if the market's going down, it'll be on top. It'll kind of flip in reverse order. Now, he's saying when the 50-day moving average falls below the 150 in this case, and then he also mentioned that the 150 has to kind of start downward trending. That's when you're in a downward market, and you should get out right around here in this example. Now, another thing to look for is like when you have a series of 4 in a row of like lower highs and lower lows. That's another indicator that could say that we're in a downward market. Now, I went to Market Watch and I searched for the graph for the Dow Jones, And over here, under simple moving average, you can click edit and you can add whatever day moving average you want. You might even be able to add like random like 60 day if you want. I don't know. Let's try it. I don't know if that did anything. Maybe it did, yeah. So once you add, something happened. So I have to click add period. Let me add 50 day here. So once you type that in, it'll pop up and then you can close this. Anyways, so looking at the Dow, let's zoom in. This is from February of last year. So it's let's just kind of zoom in a little bit so you can see. But basically you can see that everything is right now is perfectly in line. So you have the green, let me zoom in a little bit. The green is the 200 and that's at the bottom. And then you have the 150 right below that. Then you have the 50 above that and the 40 then the 20. Okay, so the very, very top line, that's the Dow. Those are the Dow stocks. So you can see they're going up and up and up. They're getting really far ahead of the 50-day, and they tend to kind of snap back and then test that support if it's still going up. Like you see here, it kind of went up, then it snapped back, then it goes up, then it tries to come back, but it's kind of got away from us in January, and that's what kind of triggered this whole thing. It just went boom, 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 and then so it broke through the 20 level support, it broke through the 40, then it broke through the 50. So now what Adam Koo was saying in that video is look for it to test the support, they call it, at the 150. So if it can bounce off the 150 and then come back up, we should be okay. And that's a great buying opportunity. If it breaks through that, you want to look for it to test the 200. And he said the 200 is kind of like the last line of defense. If it breaks through that, then we're kind of screwed and you should just get out. Now, here's my view on this. It's kind of weird because if you think about it, all this information and you being able to utilize this information to your advantage kind of relies on the fact that everyone else doesn't know this. Because if everyone knew this and everyone knew that you should sell right around now and wait for it to test the support, well, if everyone sells, it's gonna fall way through this, and then no one's gonna buy, and then it's gonna fall to zero. So there's a couple ways that this won't happen. One, there's a large enough group of people who don't know how to read these charts. Like basically me up until now, like I literally ignored charts for my entire investing career. Who knows how much profits I could have saved had I known how to do this. But there's probably a lot of people who don't. But so I guess that's kind of a good thing. Like we need people who know, need people to not know. Otherwise this stuff won't really help us, because if everyone knows, everyone's gonna sell at the same time and then the stock's just gonna go boom and just hit the bottom. So that's the first thing that needs to happen for us to be okay. Second thing that needs to happen is there needs to be a lot of brave people who will buy at these opportunities. So like if this comes down to the 200, let's say we sell because we think it's going to break through, well, there needs to be enough people buying to kind of reverse the trend and bring it back up. Once that happens, then the average Joe like me, or the average investor, will start to buy again, and then it'll kind of bring the rebound back up. So it's going to need, I mean, obviously at this point in time, I'm sure there's enough people who don't know how to read the charts. And then that coupled with probably a lot of people who are sitting on cash just waiting to buy at the next opportunity, I think those two combined hopefully should let this bounce off one of these next two levels. But if it does go below that, which very well could, because I just saw the Dow, we just saw that the Dow was down 1,000 points after hours, it could be screwed. So that's why I'm thinking about just getting back into stocks or holding cash and waiting to see what happens. I think that's a smart thing to do. And let's wrap this up. This video is super long, I apologize. I just hope you guys are learning a lot. That's why that's kind of making me feel better about this video being super long. But yeah, so, you know, I had a good run in 2017. I had a good run in January 2018. I think it's time for me to say, okay, enough is enough. I'm gonna take whatever profits I have left, which is thankfully right now, it's a good amount. I don't know if I'll be able to unload all my options tomorrow, but I'm gonna try, we'll see. And yeah, I'm just gonna take it a lot calmer for at least for the next month. So with that said, if you guys like this video, please hit that like button and subscribe if you haven't already. If you have any questions or comments, please post in the comment section below. I hope I can get this video to you as soon as possible. I did do a live stream though, so I think I mentioned that. So watch the live stream, so you should already be up to date what's going on. So thank you guys again so much for watching. Hope you had a great night. I hope you have a great night. It's kind of hard, but at this point. But anyways, we'll see you guys tomorrow. So yeah, see you tomorrow.